Good afternoon. This is Connor from 0DTE Traders here to present our market minute for September 9th, 2024. It is 12:30 and the SPX is trading higher, up 1.2% to 54.74. It is bullish, clearly, and this is really held true from the market open. ADD, which measures market breadth, plus 700 and has been trending higher ever since. Now plus 1400. Volume difference, positive 4-to-1 ratio. Now we have seen a little bit more volatility in the growth mega cap type stocks. Now growth was outperforming here at one point this morning. They led the move down. So basically that overbought sell-off. But they have been bought up and we're seeing that convergence once again. Now this indicator here measures sector performance on a market cap weighted basis. As we know, not all sectors are created equal. Not all stocks are created equal in terms of their influence on the S&P. So in green here we have growth, and in red we have traditional cyclicals and defensives. Although if we look just at sector performance today, it is clearly bullish because all sectors are green: defensives, traditional cyclicals, and growth. Maybe we need to touch on vol real quick here. So VIX is an exacerbating factor in this environment. And we thought the probable outcome was for vol to essentially contract back into that lower bound. So VIX 19, let's call it the 19 handle. Now we did have non-farms on Friday, but we did see a peak in vol around midday there, maybe 12:30, 1 o'clock. And VIX did open down 6% here this morning. And vol likes to trend, whether that's up or down. And clearly, if we just look at the short-term price action, it is down. Now, something we need to understand here, without going into a lot of detail, just real simple. Vol is an exacerbating factor on the underlying. VIX is a good proxy to give you that indication. So if you got VIX up equals, so if you see a big move higher in the VIX, that equals sell flows. You see VIX down, that equals buy flows. Now the thing with the VIX, or just volatility in general, it's not necessarily the level. What is most impactful is the rate of change. With VIX down 12%, that's a quick repricing of options. Now, I just want to touch on price action real quick because this is a common pattern we see when the market experiences a gap up or gap down. Now, a gap of any significance, which is generally regarded as over 0.5%. Today, this was 0.7% to the upside. And in this context, we generally get a bit of continuation. So gap and go, if you will, typically into the implied high, which we did come in, within a couple points to that implied high metric of 54.73. And then you get the overbought sell-off, which is tradable. But I would say the best setup is generally that dip buy around midday, 11, 12 o'clock. And this is exactly where we put on more upside risk. And that has played out quite well for us. Move back into high of day is always the first target. And then the next gamma level. Now we think 5,500, we're really not that far from it. This is a logical upside target. A lot of gamma at that strike, big psychological level as well. It is the max call. So in terms of 0DTE options positioning, there is a lot of call volume there, and it could act as a bit of a magnet. But anyways, I just wanted to highlight that real quick. Major variable being the VIX. If there's no reason to bid the VIX after a vol event, it's likely going to continue to crush, and it's going to support the upside. Anyways, that's all I have for you guys. If you're not a member and you're interested in learning more, you can visit our website at 0DTEtraders.com.